Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And today we're going to cover everything that we did for the market on Monday, August 4th. So really kind of kicking off the new month here. Even though Friday was the first day of the month, I feel like Monday is always the first day for me just to kick off the month. And we had a pretty active day. So 3 new opening orders. The market was still really volatile. Implied volatility is still very high. And then closed out a really good profitable trade on the Qs. Now, as always, if you guys have any comments or questions about this video, be sure to ask it right below in the comments section. I'll make sure I get back to all of those tonight or tomorrow before the open. So to kick off tonight, I actually wanted to start with a look at the trade that we had closed out on the Qs. Now, what's interesting about this trade, I mean, we made a profit on, which is great, 30 bucks on each of those. So we made about $60 on the trade. But what's really interesting about this trade is that it took a long time to actually realize this profit, and not too long of a time, but it took a couple weeks to actually realize this profit. And I was talking to another coaching member about how you have to be patient in this business and have to wait sometimes for these profits to show up. You can't use stop loss orders because personally, I think stop loss orders actually create more losses. And this is a classic example, and I could show a million of these, and I did show it to her on one of our coaching calls, as to why you just have to be patient and diligent with your risk management, meaning that you have to enter trades that are the appropriate risk size. You can't be over leveraged in this business. You have to enter small trades and then make small wins. So to go through the actual particulars of this trade, we went ahead and sold back to the market our Q vertical debit put spread. So we had the 97.95 debit put spread. We originally bought it for a $1 credit. Sold it back today for a 130 credit. Again, just looking to make some money on this trade with the market heading lower. If I actually go to the chart of the Qs, so this is where I want to kind of go over this just a little bit. Now, we actually entered this trade on this day right here. So this day, which is the 15th of July, that's the actual day that we actually entered the trade. And you'll notice that almost right after we entered the trade, and our break-even point was right about 96, or actually it was practically at 96. You notice that right after we made the trade, just about a day and a half after we made the trade started going in the wrong direction, right? So it started heading up, and since we have a debit put spread, we wanted the stock to go lower than 96. And this is where people get really caught in this business, is that they either A, have too big of a position size, and that move higher creates a lot of pain and they just close out the trade, or B, they have some sort of stop loss order. So they say, you know what, if it gets up to 97, for example, I'm just going to close out the trade. Well, that's all fine, but you notice that you would have definitely been stopped out of this trade absolutely by the time that it got up there. Now, had you been a little bit more diligent and just holding on to that position and waiting for an opportunity to make a profit, then even after the market rallied up, it gave us an opportunity just a couple days ago as the stock moved lower. We actually had an opportunity to close out a little bit higher than what we did today back on Friday. But as the stock moved lower and a little bit of market cyclicality came into play, we had an opportunity to close out profit. And again, I could show this a million times where it actually happens like this. It doesn't happen every single time. So there's obviously instances where stocks go parabolic. But hey, that's why you keep your position size small, so that you can weather those types of moves in the market. As far as new opening trades today, we tried to keep things a little bit more simple and do a little bit more, or a lot more credit spreads. Definitely continuing to sell a lot of premium. We actually had a couple butterflies that were working orders on some things, but actually didn't get any fills in those. But as implied volatility continues to stay high, we can absolutely do more of these vertical spreads, or a lot of people are asking in the comment section in the membership area about doing iron condors. And either way is fine by me. You can do an iron condor and do the other side of each of these trades. So if we did the calls, you can sell the puts as well. Or if we do the puts, you can sell the calls as well. It doesn't really matter to me if you do an iron condor or a vertical. The whole idea is that you're definitely selling premium. So then it becomes a little bit of judgment as to where you think the stock is going. Are you more neutral? Are you more bullish? Are you more bearish, etc., whatever the case is. In the case of all of these trades tonight, we actually had a little bit of underlying bias as to where we thought each of these underlyings would go. And I guess these are all the triple X trades, I guess. X being US Steel, XOM being ExxonMobil, and XOP being the oil and gas ETF for the S&P. So for the first one, which is ex-US Steel, we went ahead and sold 5 of the September 36, 37 credit call spreads above the market. So sold the 36, bought the 37 options as protection, took in a net credit of 25 cents on each of those, and that puts our break even at 26.25 for US Steel. So if we go back to the charts here, not see US Steel, you'll notice why we were a little bit bearish, right? Because the stock has continued to move high. It had a huge jump after earnings and even rallied a little bit more after earnings. But you'll notice here with these higher wicks that it's starting to develop on the daily chart, that's starting to test these upper ranges and failing. So it's starting to rally midday and then fail, and then rally midday and then fail. And so what we did is we sold a spread above the market. So we're giving ourselves a little bit of room between ourselves and the market. So US Steel can rally another $2 and we still make money, right? And it can stay sideways, we make money. And if it goes down, we absolutely make money as well. When we actually look at the individual area that we place the trade, you'll notice here on US Steel, we go all the way out to September. You'll notice on the call side that our first strike is right here at the same level that we're usually at, which is about a 70% chance of success. Okay, so that means that probability of US Steel actually getting to and closing above 36, which is our first strike, that's our short strike, is about 70%. So we're trading with about 70% chance of success here that US Steel doesn't get above that level and actually closes below 36. So very high probability trade, and that's why we kind of increased our position size. I really like this trade a lot. So hopefully US Steel kind of tanks in the next couple days here. All right, so XOM is ExxonMobil. We trade this one a little bit different. So XOM being mobile and then XOP being oil and gas. Just a little bit bullish on oil and gas right now. I think it's had a really tough time over the last couple weeks. Sold off very, very quickly, so we could see a little bit of a bounce, or at least that's what we're playing, right? We don't know what's going to happen, but that's what we're playing. With ExxonMobil, we sold the 95, 92.5 credit put spread. So again, sold the 95 puts, bought the 92.5 puts. We took in a net credit of 48 cents on each of those that we sold. For ExxonMobil, you can see exactly where our position is. The stock has obviously had a real tough time, continuing to move lower after earnings. But even after this earnings event, which is why I like this trade, implied volatility has stayed very high. So that usually doesn't happen. We see a big crush in implied volatility after earnings. Option premiums decay. In this case, for Exxon, actually premiums are really, really high. So selling our first strike here at 95, that puts our line in the sand way down here. We've got almost $5 of room for the stock to continue to crash, and it needs to do that and then some before we actually start losing on this trade. So again, very high probability trade for Exxon. I'll go to the trade tab so you guys can see that one as well. We're already up about $29 on the day, just given the rally that it had after we entered this order. But you'll see our first strike here at 95. That puts our probability of success today after the rally of about 77% chance of success. So the percentage that Exxon stays above and closes above 95 by expiration is about 77%. So very, very high probability trade for us and already making some money. All right, and then the last trade that we made today was in XOP. So XOP is that oil and gas ETF. Same thing, we went all the way out to September, did the 69.67, so a $2 wide strike, and took in 38 cents in credit. So with the 69.67, we sold the 69 puts and bought the 67 puts. That created that debit or that credit put spread that we like and took in a credit of 38 cents. If we go to XOP and look at that chart as well, very, very similar action to Exxon. Again, the key here being that implied volatility very, very high, but it had a really tough time. I mean, XOP, oil and gas, the whole thing's had a really tough time and possibly might be stabilizing around the support area around 74, 73. So as far as the chart pattern goes, it's really good support. It bounced off of that support strong today. So that's very encouraging. And again, our first strike all the way down here at 69, lots of room between us and the market, almost about $7 of room between us and the market. This thing could, again, continue to basically crash for the next month and a half. And if implied volatility goes down or the stock stays right here in the next couple days, this thing will decay in value very, very quickly. And we'll be out of it with a nice little profit. For XOP, same thing. We're up about 37 bucks on the day just because of the move in oil after we made that trade. Our first strike here at 69 on the put side today has about an 80% chance of success. So this is really driving home the point as to why we make trades like this when implied volatility is high. And I know for some people it's tough because you're really kind of jumping in front of these trains, right? A lot of these things are moving lower, and it's really hard to get in front of things like SPY and DIA, etc., and XOP. really, really hard to get in front of these things as they're moving lower. But with implied volatility being so high and the VIX really staying, fairly high, it was down quite a bit today, but it still remains pretty elevated to where we've kind of been used to it trading in May, June, and July. This gives us a huge opportunity as options traders to sell a lot of premium that's very expensive relative to expected risk and see a lot of those premiums start to decay. So I wouldn't be buying anything as far as debit spreads or credit spreads on anything right now that has implied volatility very high. You definitely want to be an option seller in this environment. And that's what we're trying to do, is build a pretty big portfolio here for the end of September of a lot of premium that we're short and forcing the market to make and continue to make kind of erratic moves with volatility and price. So as always, I hope you guys really enjoy these videos. If you have any comments or questions, please ask them right below here. Again, I'll get back to all of those tonight or tomorrow before the open. If you're watching this video somewhere on YouTube, you're actually getting this video about 15 days after it's sent out to our members, and you're getting these alerts about 15 days after it's sent out to our members. So if you want these alerts real time, right to your phone, to your cell phone, to your email account, and you want these video alerts the same night that the alerts go out, you got to sign up for a free trial at optionalpha.com. As always, happy trading.